welcome to Leaders of Tomorrow, ET Now's special initiative that celebrates the undying entrepreneurial spirit of the micro, small and medium enterprises. On the show today, here's what we have lined up. On our Insights segment, the MD of SBI talks about his outlook for the MSME space. And on Bright Sparks today, we will feature Midcon Consultancy, a company that provides consultancy for MSME companies. All of that coming up in just a bit. That's what we have lined up for you today. Let's kick the show off though with the special chat that I had with Rajneesh Kumar, the MD of SBI. So thank you so much for speaking with us on ET Now today. I want to start by talking about the global volatility. It's definitely making it hard for large companies to stay afloat. In your opinion, what advice would you have though for MSMEs to really ride out the storm?
MSME is a very wider term. It is micro, small and medium enterprises. As far as global volatility is concerned, and if any industry or any unit which is in this sector and they are part of that supply chain, and particularly when the exports are going down, to that extent their exports also performance will be affected. But as I said, that MSME definition is so wide that there are millions of units in this sector and not everyone is going to be affected by this global volatility.
Most of the entrepreneurs who write into us, ask us about and ask our experts really about what the best funding opportunities are right now for MSMEs, whether it's banks, whether it is venture capital. In your opinion, what should be the options and in what level of the business cycle should they consider each of these options?
Right. So, if there is a startup, then initially it would be very difficult for a startup to get a funding from the bank by way of a loan. For startups, definitely it is the venture capital or angel funding, this is what is required. And once their business model has achieved a certain level of maturity, at that stage bank lending can come in. Plus there are funds set up by Government of India which are managed by SIDBI, like Aspiration Fund. So these are some of the options through which funding can be raised. But for any lending to happen, equity is required. Equity can come from the promoters, from their own sources, and if there is a shortfall in the equity, they have to look for ways and means to raise the equity either through venture capital, as I said, or angel funding or funding support from Government of India. But as far as banks are concerned, they always look at that if any business is viable and there is a sufficient equity stake in the business, then lending is available. And that option, and without bank lending, obviously bank lending is a major source of financing for anyone.
In your opinion, does the marginal cost of lending, which has kicked in starting the 1st of April, make it easier going forward for MSMEs to raise funds?
Yes, MCLR is going to make the borrowing cheaper in an environment where the interest rates are on the downward trajectory. So MCLR is something which is which can work both ways. So right now, because the trajectory is downward, so the cost of borrowing obviously will come down. But the reverse could also happen, not immediately. But when the interest rate goes up, then MCLR also goes up and the borrowing cost becomes higher. But currently, yes, definitely it is going to make the funding cheaper, and we have announced our rates linked to MCLR for different type of products and different type of maturities, and there is an advantage. But over and above MCLR, the risk premium is another factor which needs to be taken into consideration, and the cost of borrowing apart from MCLR would depend upon the risk profile of the unit.
Fair enough. Let's talk about MSMEs which are in the rural space at this point, sir. How do you think that the banking system is really helping them overcome some of the funding challenges that the industry is facing at this point? And what advice would you have really for MSMEs in the rural space when it comes to financing?
So, rural space, I've been reading some of the newspapers, the demand has been strong. And when you talk about the rural space, then it will be more a play around microfinance. And there are, apart from the lenders or banks like us, there are many microfinance institutions and the NBFCs, they are also doing a fairly good job. And the options for borrowing money in microfinance are many more, considering that this space is dominated by microfinance institutions, NBFCs, and as well as the regional rural banks and the public sector banks.
Have startups already started accessing the fund of funds, the 10,000 crores which was set up by the government?
That fund is being managed by SIDBI, and for their funding requirement, they will have to apply to SIDBI.
I want to talk about external commercial borrowings. You know, the norms have really been tweaked recently. Do you think ECB support for infrastructure, and I'm talking about, you know, a whole host of sectors and services, including telecom, of course, do you think they're going to benefit from this route?
Again, as far as ECB is concerned, so whenever a borrowing decision has to be made, what is considered or to be considered is not only at what cost it is coming, but on the fully hedged basis. If the hedging cost is not considered, then it can lead to a lot of problems. So whenever a comparison is made and a choice is to be made between the ECB or what we call borrowing in the dollar or yen or euro, it has to be compared with the rupee borrowing on the basis of what are the hedging costs. And only then a comparison can be made that whether ECB is a cheaper option or not.
I want to take a slightly broader question at this point and ask you whether you think conventional financing methods and the framework really work as far as MSMEs go.
I think we are, as I mentioned earlier also, that we are seeing a significant shift as far as the method of lending are concerned. The balance sheet method, which was very prevalent because the inherent problems around balance sheet method, which does not capture the cash flows. So the shift is going to happen where the lending decisions would be based more on the cash flows and rather than on the balance sheet. It is very important for the lender also to have an assessment, correct assessment of the cash flows and capture them through their bank account and base their lending decisions on that. And that will address to a large extent the problem of NPAs also, because there will be a much more tighter control on the cash flows. So cash flow based funding is going to be more and more popular in my view as compared to the balance sheet method of lending. And as I mentioned again earlier that the funding through aggregators, what we call platform financing, that will become very popular. And the loans which are backed by the property, which are asset based lending, that is also becoming very popular because it is relatively hassle free, and the MSME sector or the SMEs also find the borrowing much more easier and cheaper through these routes.
You were talking earlier about your PayPal. I want to speak about the role that technology really plays when it comes to MSME funding, sir. You've tied up with PayPal. There's also, according to reports, Amazon and Snapdeal. But do you see this being a way forward for the industry?
I think so, because what the likes of Snapdeal or Amazon or Flipkart, they have done is that they have enrolled lot of vendors and sellers who are supplying these through these platforms, and their performance is available with these aggregators, and that makes the lending decisions much more easier, faster, and a credit decision can be obtained by using the data within a few minutes. So that is to me it appears to be very amazing process, which is a paperless and a very quick decision making process, where the reliance is more on the data analytics and the cash flows, and that is way forward is about using the technology in all the aspects of lending, starting from loan origination and till the date of disbursement, supervision, monitoring, whatever happens during the entire loan life cycle. The role of technology has already become very important and is going to become more and more important, and it will be beneficial to the lenders and it will be beneficial to the borrowers in as much as whatever efficiency gains are there, they will ultimately get passed on to the cost of credit, and a benefit to the borrower also.
You opened a dedicated branch for startups. What has the response there been, and what's the kind of growth that you're anticipating there, sir?
That has been I would say, a fairly successful experiment. Every day we get a lot of inquiries from startups, and of course this branch is not for the lending to startups, as I have already mentioned, that requires a very matured level of business model before we can start lending. But it is providing help and advisory in setting up of the banking accounts, how to receive money, how to send money, how to purchase forex, tax advisories. So the idea from the beginning was to be in the advisory role, and that is being performed very well in our startup branch, which is under the brand name of SBI InQ. And in fact, we are quite happy that this initiative has been taken by State Bank of India, and it is proving to be a good help as far as the startups are considered in the city of Bangalore.
Our last question, sir, as we're ending this conversation, if you were to encapsulate your advice for MSMEs which are struggling to raise funds, what would you have to say to them?
I have to tell them that have a proper business plan, be honest, and your true financial position should be reflected on the papers you submit to the bank. Make use of technology. You have to be constantly competitive, and if you are competitive and your credit history is good, then I think the availability of funds is not an issue, and for all the good borrowers with good credit history and credit rating, even the cost, there are very options to have a competitive borrowing. And the last word is, pay attention to your working capital cycle. I have found in my experience in dealing with MSMEs over almost now 30 years, that most of the time the enough attention is not paid to the management of the working capital funds, and sometimes there is a tendency to acquire the fixed assets without arranging for a long term funding, and this leads to a lot of problems for themselves and as well as the banks.
Let's take a quick break. When we come back, we will put the spotlight on Midcon Consultancy, a company that aims at providing consultancy services for the MSME space. Do stay tuned. Welcome back. You're with us here on Leaders of Tomorrow, ETNow's daily platform for the Indian micro, small and medium enterprise sector. On this series, we profile some of the brightest and best leaders from the MSME space. With the rising number of entrepreneurs in the country, Midcon Consultancy has realized that business opportunities exist as far as providing consultancy and training facilities to SMEs. Midcon, in fact, is the first company to be listed as a consulting firm in the SME space. Started in 1982, Midcon has provided consultancy services to over 150 companies in India so far, and provides services in various sectors like agri and food processing, infrastructure, banking and finance. Paulimi Mukhopadhyay has more on Midcon for us.
Businesses in India are elevating the country's economy. With the rising number of entrepreneurs in the country, it's crucial to provide sound consultancy and training facilities to these small and medium firms. The company, which became the first ever to be listed as a consulting firm belonging to the SME sector, is Pune's Midcon Consultancy and Engineering Services. Initiated in the year 1982, Midcon has provided consultancy services to over 150 companies in India. It provides services in various sectors like agri and food processing, infrastructure, banking and finance.
Midcon is country's one of the leading certified consultancy and engineering services firms. How was this company built?
Midcon was formed in actually 1982 by the investments of the nationalized banks, state government corporations owned by Department of Industries. 1995 we brought a paradigm shift in our services because market was changing. That was the beginning of the global scenario. So for example, we intensified our efforts in energy audits. Today we are one of the leading energy auditor in the country approved by Bureau of Energy Efficiency. We are having our own laboratory for environment testing, which is approved by Ministry of Environment and Forest, Government of India, and also have NABET accredited consultants. Then we are leading consultants in biomass and bagasse power projects. We call it decentralized power generation projects. We are consultants today in commissioning solar power projects and wind power projects. Currently we are working on two major assignments in Kenya as well as in Comoros in Africa, plus one major assignment in Vietnam and also in Bahrain.
Midcon offers the services in over 12 verticals and different sectors. What are the kind of sectors do you provide the solutions?
Decentralized power generation, that means today most of the renewable energy related projects are coming in this particular segment, is a major revenue earner for our company.
Okay.
We have been consulting now bagasse, biomass, coal-based projects, as well as we are consulting solar power projects or wind power projects. So projects which are in decentralized power range are our prime forte.
Since your company caters to large caps as well as MSMEs, what is the future vision for Midcon?
You see, with our office infrastructures ready in cities like Mumbai, Pune, Nagpur, Ahmedabad, Delhi or Chennai and Bangalore, and the rate of interest going down on the lending, I hope that lending offtake improves. If such a development takes place in the manufacturing sector in our country, then consultants like us will be greatly benefited. I am hopeful of recruiting at least 100 more professionals pan-India to work in our branches and achieve at least 100 crores top line in the coming 5 years.
With the increase in the number of new businesses in India, safeguarding natural resources and protecting environment has become the need of the hour. Midcon raved reviews in his focused work in power saving by the use of conventional energy, carbon services and various environment management consultancy services.
Midcon's future is synonymous with the growth of the power division, and we contribute almost, these three divisions put together, we contribute almost 50% of the revenue and profits, more profits of the company.
With the support of the government, Midcon offers state-of-the-art facilities to students to develop their own products. It also encourages budding enterprises by giving them soft loans to start their own firms. In the special training projects, Midcon has been instrumental in providing incubation facilities to J&K students to make them industry ready.
We are providing hand-holding support to entrepreneurs, those who have done some innovative product. We are giving incubation facility here, and we give them support till they start their own enterprise. Apart from this, we are providing them soft loan at a very reasonable rate of interest.
Sustaining themselves through turbulent times of the economy, Midcon has shaped itself as one of the front-runners in the SME consultancy sectors. It has not only helped businesses grow, but it has been successful in managing to raise more than Rs 25 crore through an IPO.
Next up is our special segment Tech Tet, where we essentially bring you insights from technology leaders. Today, we are talking about affordable technology upgrades in the printing space for startups as well as MSMEs. Take it up.
At HP, how are you empowering small and medium enterprises with respect to the machines and the portfolio that you offer really?
See, the small and medium enterprises, they realize that technology is the biggest enabler for their growth. In today's world of fast technology shifts, the only way to grow, they know and differentiate themselves from their competitors, get market insights and really work on their future growth potential, technology is playing a very important role. They realize it. But one of the biggest challenges which SMBs face today is they don't have expertise in-house for technology, either technology adoption to technology conceptualization to deployment.
Right.
And that's the biggest challenge, unlike large enterprises which has large deployment teams. So at HP, we really are becoming a consultant in that sense for SMBs in terms of really understanding the needs and providing them an end-to-end IT solution.
Right. And talking about the different models and different financial models particularly that an SMB can really take up with respect to technology, they're often very wary of investing in a capital intensive model. So if a small company is looking at an OPEX model, then what's the sort of offering of machines that you can provide?
Yeah, before I answer the OPEX question, let me give you a little bit of preamble of what is the challenge which SMB has, that why do they need OPEX model? That everybody understands that the refresh is extremely critical, largely because the data, the way machine performs, so productivity gets compromised if you don't refresh. Then the data security is a big issue and operating systems compatibility becomes a big challenge. Some of the softwares which they are using, they don't get compatible and the support of that is not available. A lot of SMBs fear to refresh, but in eventual process they actually lose out opportunity to really invest in technology and get ahead of the curve. And largely because sometimes they are really concerned about the capital expenditure which they don't want to put on this area and want to put in some other areas where they feel it's important at that particular stage in time. The OPEX model which we are really working on makes sure that it's not about just OPEX model per se, that okay, you pay only on a quarterly basis or a monthly basis on the technology what you buy, but it's about technology life cycle management. So including the what kind of technology is required to support services to refresh of that technology. Right, it is available in a device as a service format where a device, software, services and the refresh, everything is coupled together in an operating model so that the technology refresh cycle is also happening while the operating model is available for them to buy or to buy on OPEX model than on the CAPEX side. So that is really helping them to really just download their entire load on a company like us and then say, okay, you manage end to end and I pay you on an OPEX basis.
Well, with that, it's a wrap on tonight's episode of Leaders of Tomorrow. We'd love to hear from you, so do feel free to get in touch with us. You can email us at leadersoftomorrow@timesgroup.com. You can reach us on social media on Facebook by using the hashtag LOT. You can even call us at the number which is flashing below on our screens. Thanks so much for watching.